Okay, we are live. Hello, everybody. I am Kevin. Honored to be your host for our first R cryptocurrency event. We are live. Hello, everybody. Whoops. I am Kevin. Let me pause that. Okay, yeah. So I'm honored to be one of your hosts for our cryptocurrency events. And today our topic is going to be about how to fairly value Bitcoin and look at some of the methods out there in the space. So I'm here. I'm also here with Adrian, another person on the Bitcoin for Beginners team. And we're just a bunch of guys that we're just a team that loves crypto from a variety of backgrounds, but let's let people trickle in real quick. And then we'll be on the live chat too to kind of answer any questions you may have. But I have some slides for you guys, so let me screen share real quick. Okay, can you see my screen, Adrian?
Yes, I can see your screen, although it seems... Oh, yes, I can see your screen fully. I also see the slides on the left side.
Oh yeah, that's fine. I'll just
All right, now it's gone.
Actually, one sec, sorry. Yeah, I'll just use the slides. Okay, so we're going to take a look at a few ways on how to value Bitcoin. And before that, I'm Kevin. I'm the founder of Bitcoin for Beginners, based in San Francisco Bay Area. Not an economist I don't have a financial background, but we did do quite a bit of research on this topic. And it was quite fascinating too. So I hope you guys learned something today. So why should we take a look at value? Well, first of all, actually, let me try to do this in presentation mode. Okay, is this still working all right? I assume it is.
Yes, it is.
Okay, so why do we want to take a look at value? Because then we can tell if an asset is over or underpriced. And it can be used to gauge price direction. For example, in real estate markets, you can take a look at the location, the materials of the building, age, costs, regional markets, etc., to kind of get a fair value or a range for a certain property. For stocks, you can look at the industry it's in, the company assets, its quarterly results, the management team, and combine all of those to generate kind of a fair value. And then we have commodities like gold and silver, which are a little bit harder to value because they don't have any income producing assets or underlying assets tied to it. It's basically the asset in and of itself and primarily a store of value. So the price can really only be pegged to supply and demand, but they have had thousands of years of price discovery, right? I mean, gold and silver has been around forever. So we can kind of get a perceived market value based on that. What about Bitcoin though? It's a unique and new asset class. And it's kind of like gold. There's no physical use case for it, no revenue stream nor balance sheet. It's a store of value in some sense. But it can also be intrinsically tied to its underlying blockchain network. So if you take a look at securities, they have been around, securities as in stocks, they've been around for hundreds of years, gold and silver for thousands of years. And so there's a lot of data and studies that have created good metrics and valuation models for like securities and gold. But Bitcoin's only been around for 9 years, right? And that's when Satoshi mined the first block. So not a lot of data to go off of. So there have been current efforts, though, to create valuation methods for Bitcoin. And this can potentially be useful when trying to analyze its price. So let's take a look at a few. Just a quick overview of the ones that we're going to cover today. So first, we're going to chat real quick about technical analysis and how that fits into the picture. And then take a look at Bitcoin's value based on its adoption and network effect, number one, its production cost by mining, number two, and its market size as a currency, number 3. And one sec, before I get back into that. Okay, everything seems to be going good. Just checking on Discord and live chat real quick. Okay. So technical analysis is basically the assumption that all fundamentals are already factored into price, and thus there's no need to closely pay attention to them. So they don't try to measure a stock's or securities or an asset's intrinsic value, but instead say that you just need to look at patterns and trends to kind of suggest what an asset will do in terms of price in the future. And this definition was from Investopedia. So they use a lot of things like resistance, support, moving averages, and other indicators to kind of gauge price. But it's also interesting to take a look at the fundamentals approach, because that is a good way to kind of gauge value and where price will trend in the future, at least for existing assets. But in terms of Bitcoin, let's take a look at the first one that I mentioned, and that is the value of Bitcoin based on its network. So the first thing, and the most popular and famous one, is based on Metcalfes Law. Basically, basically what it says is that the effect or the value of the network is n squared. N being like the number of users or connected users. So any network can follow this Metcalfes law. You have telecom, social networks, payment networks. If you think about it, they all get more valuable as soon as there's more people using it. And it really works, because if you compare Facebook's revenue growth to its number of users, you will see that it's correlated based on a Metcalfes law based model. And Bitcoin's network is pretty similar to these three: telecom, social, and payment, if you think about it. So let's try applying this model to Bitcoin and see what happens. First of all, we have to decide what N would be. There's a lot of choices, right? You can be the number of users, number of devices, full nodes, wallet addresses, and are we going to choose them as unique or active in some sense of the word? In our opinion, the best choice for N is the number of full nodes and light nodes together. But of course, that is potentially hard to tell the exact number, and you'll have to do different ways of researching this to kind of get an estimate for this. The best results from this type of analysis from the research out there considers N as the number of addresses. And so Tom Lee, our favorite crypto bull from Fundstrat, has kind of made a method based on this model. And he says that the value of Bitcoin's network is N squared times the average transaction value going on throughout the network for a given period of time. And according to him, this has explained 94% of Bitcoin's price movement in the past 4 years, which is a pretty impressive amount of or success rate for the model, in my opinion. And this just makes a lot of sense, right? Basically, what they're saying is that the value depends on the number of users and how much they're transacting. And this can also be used to predict future price based on how you see expected adoption growing for Bitcoin over the years. So if you're keen on kind of doing this calculation yourself and doing this projection, you can go to Blockchain, the website, and they have all these stats about unique addresses, number of transactions, transaction value on average. This is just a snapshot, but if you scroll down on this page on the Blockchain website, it will also show you like average transaction value and so forth. So you can use those to kind of match up with the model that Tom Lee has, or your own model, and try to get the value of the network based on unique addresses and transaction value. So there's another similar one, which is network value to transactions ratio. And this is kind of similar to a company's P/E ratio for stocks. And so it's short NBT, which is market cap divided by the total value of transactions going on. So what can this ratio tell us? Well, it can tell us how far the market cap is stretching away from the actual value being transacted on the network. And this is also potentially useful for analyzing price corrections, right? You can say, is it a consolidation that's currently happening, or is it a full-blown crash? And so you can look at the ratio for clues for this. And this was kind of popularized and created by Willy Woo. You can follow him on Twitter at Woonomic, and he has a blog that's really, really fascinating about this stuff. But here's one picture of the Bitcoin. One second. This of the Bitcoin NBT ratio. And this is a little bit old, but you can see that on the bottom, this is the NBT ratio. And when it goes above its normal range and the price drops rapidly, that is when it's going to be a full-blown crash. Whereas if there's price corrections and it's within the range, then it's more likely to be a consolidation. This next part is a little bit more updated from someone else who follows his NBT ratio. And you can see that in our current 2018 bear market, the NBT ratio has been above the normal range, and hence this is more like a full-blown correction than a minor consolidation. So this is really interesting. I wish I came across this earlier, because this might be an interesting way to tell like when we should keep hodling or when it's going to be more likely to crash full out, and when we should maybe lock into fiat per se. And the last part of this Bitcoin valuation as a network is I want to touch on this logarithmic regression model that some of y'all may have seen before on Reddit or on Bitcoin Talk originally. This was originally posted in 2014, and it modeled Bitcoin's adoption as a log regression. Basically, it's saying that its growth of user is based on this number of addresses, so kind of similar to Metcalfes Law. And it makes sense, right? Because basically log regressions, it slows down. It goes like this. It slows down as time goes on. And it makes sense because the percentage growth decreases as the network matures. And what they did is I wrote that wrong. It's not overplayed. They overlaid daily weighted price of Bitcoin on top of that curve. And that predicted the following. They predicted 1K for Bitcoin in April 24th, 2015, 10K on November 22nd, 2017, 100K on July 16th, 2021, and 1 million on September 6th, 2026. And so this was an updated graph based on it. And the original curve was the purple one. What's really fascinating is that if you take a look at Bitcoin's price, it kind of missed some valuations early on, or missed some like prediction points. But in the 2017 prediction, Bitcoin's price hit 10,000 just only a few days off from when it predicted it would happen. And this isn't the latest graph because we've gone under the curve again after the bull market of 2017 and early 2018. But if this is true, then Bitcoin may potentially hit 100K or a million. I mean, for all of us hodlers and believers, that will definitely be very interesting and hopeful that that's the case. But I guess we'll see. This is really interesting as modeling Bitcoin's adoption as a log regression and its kind of accuracy, or so far at least, for in terms of price modeled to that adoption curve. Okay, let me see 1 second. Okay, so next up, I want to take a look at Bitcoin's value as it relates to production costs or mining. So production costs matter, right? Because it does have an influence on price, because it needs to be economically viable to mine Bitcoin in order for it to be a viable asset. Just like gold miners, they need to make enough to be able to cover the cost of their operations, or else they wouldn't mine it anymore. Preferably, they would get a profit too. But the thing is that mining costs differ worldwide. You have different costs of electricity, different equipment costs, different costs of operations, and so on. So it may be hard to get a reliable number to use in this case. But let's just assume for the sake of argument that we can. The first way to do it is a simple multiplier. And what this theory says is that the fair value of Bitcoin is equal to 3x the cost of mining. And of course, this number is random, but this is the most common one. And it can be used as a way to establish a maximum reasonable price for Bitcoin based on its production value. But if we think about it, the valuation of Bitcoin likely doesn't solely depend on its mining costs. It could depend on network value, like we just talked about a second ago. But mining can also be correlated to network adoption in a sense, because the more users there are, the higher price, the more miners that come in, the more mining resources are needed, and then the higher the mining cost. One sec. The next thing to look at is the net present cost. And basically this compares the total cost of mining effort to simply investing in Bitcoin on an exchange and calculates that break-even point. And it claims that the break-even point, that the price should fluctuate back towards its equilibrium point. Why is that? Well, because if the price is above the net present cost, then mining is more profitable. So if then more miners enter the fray and compete, that raises the cost of mining, and then MPC increases back to the price. On the other hand, if the price is under the net present cost, then buying on exchanges and holding is more profitable than mining. And in that case, that generates more demand on exchanges and prices increase back to the net present cost, or so the theory goes at least. The last one in this kind of general grouping of Bitcoin's value as tied to its production cost is the average cost as the price bottom. This is a popular theory during the 2018 bear market. I believe Tom Lee also pointed this one out, that the average cost of mining serves as a good bottom or support for Bitcoin's price. As we've seen so far, Bitcoin has bounced 3 times off of around the 6K support level. And the theory goes as this: usually miners are selling their Bitcoin to cover their operational costs. But when the price goes too low, they'd be selling at a loss. So instead, they hold on to the Bitcoin and wait for it to go up. And this reduces the supply of Bitcoins hitting the market and thus reduces selling pressure as well, making price go up. This is a reasonable theory in my mind, but not too much evidence to support it so far. So I guess we'll see on how much or how true this holds. The final thing that we want to look at is the value of Bitcoin based on the currency market size. And this is based on the quantity theory of money, the famous economic formula NV equals PT, which M is equal to the money supply, which is usually, and there's a lot of different ways to, or types of money supply. You have like M0 to M4, I believe. Or maybe it was even more than M4. I forget. Adrian, do you remember how many M's there are?
No, not really. But the most common are M1 and M2 to be used.
Right. So thank you. So M1 is near cash, or cash that is used for medium to short-term expenses. V is the velocity of money. How many times does such a currency unit change hands on average? P is the price level of goods and services. So this is what we'll be using to kind of calculate for Bitcoin's value or price. And T is the number of transactions performed for these goods and services. So the reasoning is that all money in circulations times how much each unit is kind of transferred for or changes hands is equal to the total amount bought and sold times their price level. And so if we take a look at a very common argument, which is that Bitcoin is always going to be useful for the illegal drugs market, the theory is that the base value of Bitcoin is that it's always going to be useful to buy drugs with, just as fiat is always going to be useful to pay taxes to the government with. So if we use MV equals PT with some assumptions, MV is equal to 21 million, the long-term supply of Bitcoin. Of course, is less right now, and you can argue that some are lost forever, but let's just use this for now. And the velocity is 10, which is the common one for M1, which is the monetary supply type M1 for short-term use. T is the global drug trades, valued at roughly $426 to $652 billion based on a UN report. P is equal to the Bitcoin value of $1, which is what we'll be calculating for this exercise. And so if you do that, P equals MB divided by T, you get roughly $2,028 to $3,104, which has been a price before, obviously, but a little bit low compared to right now. Some problems potentially with this approach. The velocity can change. That one assumes a constant velocity of 10, but the M1 for even fiat currency has fluctuated between like 5 to 9, for example. And the velocity for drug money may be even more different compared to M1 for USD. And also, Bitcoin can also be used as a store of value. So to calculate its velocity based purely on its use as a short-term currency just seems kind of flawed. Also, if Bitcoin was used for all illicit trades and not only drugs, then P would be calculated at 7,619 or even as high as 10,476. But this method only lets you calculate how much Bitcoin's price should be if it were the only currency for drugs trade. Not that useful for fair value calculations if you think about it, because it can have other uses besides just being a currency for drug trade. But just for kind of kicks and giggles, what if Bitcoin replaced all fiat currency? What would this calculation, what would this formula get us for its price? Well, maybe Bitcoin becomes the one world currency that some people hope for. Then we would use M2 for velocity because M2 is long-term savings and M is 21 million as before. V is 1.5 velocity, same as the M2 for USD for calculation purposes. T is $90 trillion, which is the gross world product estimates. And so doing this calculation, we would get Bitcoin at a price of $2 million and of roughly $850,000, which is pretty high. And that's what it would be, roughly speaking, as a price ceiling if Bitcoin were to replace all fiat, as some people want it to be. And lastly, just as a side note, if Bitcoin was a store of value instead, we can assume that the total value of Bitcoin could possibly equal the total value of all gold mined. And in 2017, that was 7.5 trillion. So let's say that stays steady. Then right now it would be roughly $350,000, which is still a big amount. Just a fun exercise to think about. So what did you guys think about this? We were interested to see what Bitcoin's different ways of valuing Bitcoin, because during this bear market, everyone's like, is there a way to value Bitcoin, or is it just purely based on supply and demand? And so we wanted to look at the different models and theories out there, and some of them were indeed interesting. Personally speaking, I think valuing Bitcoin as a network makes a lot of sense, and hopefully we can get more and more adoption so that the network value grows and that we can hopefully potentially keep on tracking that logarithmic regression model that someone put out years ago on Bitcoin Talk. Let us know if you have any questions either here in the live chat under this video, or you can check us out at youtube.com/Bitcoin for beginners. And I also want to bring Adrian on real quick to let him share any additional thoughts I may have missed, because he helped do a lot of the research for this presentation as well.
Yeah, I was personally certainly impressed by the fact that in the logarithmic regression, indeed, the price crossed the 10,000 mark like a couple of days different from what the prediction was. So that was like very, very interesting to notice. So
yeah, they put out that prediction way before it crossed. So it might have been a huge coincidence, like you said, but
it's like 2014, right? So yeah, you almost think that it can't be a coincidence like that close. It's like 4 days difference or something like that.
Right.
So yeah, what our cryptocurrency says in the live chat is that inflation from mining is currently around 4%. So mining probably has a lower impact on the market than it used to have, because obviously
I see.
Bitcoin has inflation, and that's now indeed because of the mining reward, roughly 4% per year. But it used to be higher before the block halvings. So as long as Bitcoin's the demand for Bitcoin grows faster than 4% per year, the price of Bitcoin would increase, obviously. And from the next halving, which is not, wow, that's in, do you remember that?
It's like 2020 or something.
Yeah,
When's
yeah,
the
I'm
next halving
pretty sure
again?
it's 2020. So that's going to be halved again. So then the inflation would be around 2%.
2%, yeah.
So it's going to be easier for Bitcoin to grow as well by then.
Yeah, and a proto man. Wait, let me just stop screen sharing real quick. Okay. Cancel spotlight. Okay. A proto man says, how would you value altcoins? Can you touch on that a little bit or share your thoughts?
How would you value altcoins like, for example, XRP or XLM? Well, they have, when it comes to network value, they obviously have similar the network effect has a similar influence on the price or the value, the network value of altcoins. But because the use of addresses might be different per project, like for example, in Ethereum, there are no change addresses continuously being made. So that means that the measuring through addresses doesn't work with all other altcoins. Now, XRP and XLM are closely tied because XLM is a fork of XRP, so they should have a similar way to measure them. I wouldn't know that, but I do know that trying to compare different projects based on their network value is going to be more difficult because there's just a different way how you can assume the number of users, the growth of users. But definitely for those cryptocurrencies, network value also is an important issue. The more users it has, the more value it would get. And it's also reinforcing because the more users it gets, the more useful it gets. So it's reinforcing. So there usually comes a tipping point in a network effect where more people start to use it because the people around them are using it. So that's why the network effect really does make a lot of sense. And it applies to altcoins as well, obviously.
For Ripple, they're transacting a lot larger value though, right?
Yes, and that's why it's difficult to compare ratios or calculations with each network.
Yeah, makes sense.
But the more value gets transferred and the more users it has, obviously those are factors to take into account. But you probably need to use a slightly different formula to make the right calculations, to make comparisons between different coins.
Awesome. Okay, well, it's been a blast, everybody. This was our first ever event, and it's our pleasure to be a host. Oh, Coin Metrics. Yeah, we should check that out. Okay, I'll check that out after the stream. But I just want to say once again, it's our pleasure. We hope to see you guys on next week as well. Same time next week, we'll have another topic. Hopefully that's very interesting. Hopefully that's informative, because we're Bitcoin for beginners. We want to teach. We love crypto. We love Bitcoin. We want to teach people and do research ourselves and just help adoption grow through education. So let us know if you have any other comments down in the comments, and we'll check it out later. And hope you guys have a great rest of your day.
See you all later.